Okay, so let's get into the trades of the day um, analysis. This shouldn't be too difficult. Doesn't seem like there were too many trades today. Here's when the day began. Here's when the day ended. Mostly around kind of the same area. Mostly spent the day in this trading range um, with, very minor deviation. I mean, when I say minor deviation, obviously a lot of people got liquidated and, trapped, and this was a rough time for traders, but for the most part, we stayed in this trading range the whole time. So the purpose of this exercise is to go through and kind of find the trades that were possible to take. It's one thing to go through and look at each individual trade and see, or each individual bar by bar and look at what setups form. But that's something that we're doing already as an exercise throughout the day as we're reading the chart. So what really we want to do during this exercise is look at kind of the big moves that happened throughout the day. Like today, the only big move that happened was this, and then all of this. But like, let's start with this type of move. Looking for a move that first of all can produce some sort of profit. When I think producing some sort of profit, I'm definitely thinking at least 1% usually. Of course, you can take smaller profits, but it's particularly in crypto, where sometimes your fees are maybe like up to 4/10 of a percent. You really, if your market execution fees are 0.2%, then getting in and out is already almost 0.5% right there. You need to be making nearly 0.5% on any trade for it to be worthwhile for you to take that trade. So that kind of has trained me, trading on Bitfinex, has trained me to look for better setups oftentimes, at least trying to capture 1%. Things like Bybit and FTX, like FTX charges 0.075%. So 0.15% if you market execute everything 15/100ths, and they charge a 0.025% for limit orders. So if you market one way and limit the other way, oftentimes for me that'll be marketing in and limiting out. You're paying 0.1% in fees, 0.1%. But I'm used to much higher fees, so I look for. We're going to be looking for moves of at least 1%. Obviously, you can say this was a move kind of 1%. I didn't think this was going to be 1%, but like something like, let's say this to here, technically you can profit on this on like an FTX instrument, but I'm not going to be looking for this trade. We will be evaluating this price action to determine what type of trades we have, but not exactly going to be looking at that. So what we're going to do is look at the move and then try and figure out where does it make sense that we could have entered and why, and try and find as many reasons to explain things as we possibly can. So we're going to be staying within this range here, and we'll start all the way from this left side. To start, we had this strong push up the day before, right? That trend line, that shallow trend line broken here, major trend line, I mean not major trend line, but the steeper trend line was broken here or here, right? So certainly this trend line had been broken. We were potentially looking for some sort of rounded bottom that could take us back up to the top, and that of course never happened. This ended up being a failure. I also want to say kind of formed a double top failure on a macro time frame, like with something like this. But since we're not as, like when we're trading the 5-minute chart, you're not really looking, all the way out here for 11 days. The stuff that happens over here has no bearing on what's happening on your 5-minute time frame. So basically what we're looking at is we've kind of entered into somewhat of a trading range day that happens to have followed this two-legged move up the prior day. And now bears will be looking for fades and bulls will be looking for some sort of continuation up to this level. So no continuations occurred. Here were some potential fades where bears were making money. Bears made money here. Bears made 1% here. This is probably not one that we're going to be looking to take. Bears made money here. Bears obviously made money here. Did bears make money here? not really. Bears, I wouldn't say that Bears really made money here, but certainly we're kind of talking about this trade. We're kind of talking about this trade earlier today, so we'll talk about this one because it's not super likely that we're going to talk about it tomorrow. But let's start with the Bears trades. Here we have a strong leg down within this channel from the prior day. It can kind of be broken up into one leg down and then retrace, and then a second leg down here. And this second leg down comes in 1, 2, 3 pushes. But ultimately, because we can house this in one channel, we're calling this one leg down. And so when we see now this one leg up and a second leg up, this, maybe you can put it in some sort of channel, but it's not really the best channel because it's not really being confirmed by 3 points. You have this point here and this point here, and there's no real point here for it to be confirmed on the bottom. And you have this point here and this point here. There's no third point to be continued on the bottom. You can maybe say, like, let's zoom in here. You can maybe say this touch and this touch and this touch are 3 pushes, but this is really more so to be considered of this is one push here. I wouldn't consider, if I was considering this to be a push, I would be considering this to be a push within this move. So I would say maybe something like we have one push here, second push here, and a third push here, and that creates the 3 pushes up, and then we go down. I would not be saying this is one push, 2 push, 3 push, because these are clearly different moves. So that's just one of the ways that we kind of think about it. So we have 1, 2, bear flag here, this channel, bear flag, and then the breakout here. So once we break above this trend line, bears are going to be looking for a test of this low here. Let me draw it. A test of this low here, right? And so following this strong pullback, we have a low 1 sell signal. Yep, a low 1 sell signal right here. And fills on the very next candle. Your short is something like this. Stop is up here above this candle, and you're targeting this level here, right? Not a great, I mean, it's a great risk to reward ratio, but you're not even capturing 1% on this, so this isn't a trade really that we're looking to take. But it is important to know that this is our low 1 sell signal. And if we were trying to take this short, we would probably be targeting not this level. We're probably wanting it to go further, and that makes it more sensible for us to take this short. But when we see this such a strong bounce here, this isn't super advisable necessarily as the short to take. So we have this low 1, and bulls are able to pick it back up and send it to a new high, new swing high. That broke this trend line. So this was a very steep trend line. So we broke that trend line and we tried to give it a test, and we had a higher high test. And the second, the L2, comes in on this bar here. So the entry is, the entry is underneath here on the next bar. You can put your stop either here if you're being really aggressive, or more realistically above this. You are not, it's not out of question to think that there might be a third push up like this, such that maybe you want to keep your stop even higher, maybe above this level or something like that. But structurally, it certainly makes sense to put a stop here, right? So this is kind of the setup that you're looking for, and looking to get back down to, at the very least, this level, if not further. Again, if you're taking a short at this level, you're probably hoping to swing some of it for a lower level down to 62. But at the very least, you're looking to get to this level. So this ends up getting not a good entry candle, but you do get the follow through on the next candle, and then we start to build this trend line. Excuse me. We start to build this trend line that gets respected all the way down. So this ended up being a good trade that you could take. And honestly, if you're putting your stop above this level never gets disrespected again. This level never gets even really tested like that. And you are able to capture the full extent of this move if you want to hold it all through this, and if you're really a sicko, all the way down here, right? You're probably not a sicko. You're probably not sick enough to get this, but you know, it's theoretically possible. So that's one trade, good trade. This ended up being a good trade. That on the scalp time frame, it doesn't really achieve what you want, because when you're entering on a 5-minute chart, you don't really want to wait all the way to here, 11 hours almost, in order to get the resolution that you're hoping for. But in a trading range day, sometimes that's all you can really get. If you are in this trade, you're probably holding through this, and you probably, when you see this, you're thinking, okay, this is a double top bear flag. We should have another opportunity down. You might end up taking partials or full profits here, because now we're setting up potentially a double bottom bull flag. And it has happened in kind of 1, 2, 3 pushes down on this trend channel line, right? Then you have another push up, lower high here, tries to break down, bulls step in again, put in yet another lower high, confirm it with this double top here, and then that breaks down even lower. Now we have 1, 2 legs down, and bears are not even able to get it down to this level. So it's almost looking for bulls like a double bottom bull flag retest here, and then we're going to go. In fact, is this where I got caught up? Yes, this is exactly the trade that I got caught up in. Thinking that we have a double bottom here that has broken 1 line, 2 lines. This is a 2-legged move, 1 leg down, 2 legs down, with this little 2-legged chop in the middle. And then we've broken above this trend line here and retested in 1, 2, could not break lower than here, and we found a nice springboard here. And now we're thinking that from here we can just keep going upward. That's exactly the trade we took. It ended up not working out for us. If you were able to buy down here, you kind of maybe got a percent potential up here, but not really the best trade. Taking this trade, I mean, and we took this trade above, we were wanting to take this trade above 63.3. I ultimately entered over here, missed this move and entered over here, but technically the trade would have been above here, and the trade would have been above here to at least 64. So that would have been the bullish trade. An entry above here, but it never ended up triggering, so that one doesn't count. Okay, I have to be careful because I do want to keep some of these drawings on screen, but some of the stuff, like, you know, I don't want to go, and I typically rely on just delete all drawings, so we're not going to try not to do that. Okay, so that's this trade. Now we get this double top, in essence here, kind of also a lower high as well. I suppose your short signal is this inside bar, small inside bar. It's not really an inside bar, but it's a small-ish bar, such that you can take the short on the other side of it, put the stop on the other side of it, really tight stop, but you're just playing the momentum here that we're going to take a shot down here. I don't really like it. It doesn't really make much sense to me, because this is so strong that, yeah, if we are going to take a short here, we kind of are expecting it to be a quick spike down. But after this strength, and after seeing all of the prior bullish strength in this region, we wouldn't be surprised to see something like this happen. Right? And so in that sense, maybe it's not the best short to take here. I guess it's probably not the best short necessarily to take with a stop up here. No, I guess it is probably better to take that stop than this stop, right? Because this stop, it's like you're either in or you're out. You don't really get to evaluate anything, because the moment that it comes back up here, you're done. But, you know, what if it comes down like this, and you have all of this region to discern whether this is going to end up like this, or if we're going to do something like this, right? So in that sense, this stop is not great. The better stop would be above here or above here. That's maybe, I don't know. I don't really feel like there's much of a setup here on this 5-minute chart to be taking this, so I would not have taken this. Of course, I didn't take this trade. And I also didn't close my long out here. But yeah, this is what you should have done. If you take this long trade, you probably do want to be closing out here, here, or here. 1 push-up, 2 push-ups, 3rd push-up. You're getting 3 different opportunities to take some money off the table within this, around the 63.3 or 63.4 area for roughly a break-even trade. You are getting a wedge as well here that's forming. Right? And that ends up setting the second entry here, which I think is a much better trade than to take the trade here, because we now have strength shown by bears in this region back towards the bottom of the range, which if we were happening to form this rounded bottom that we've been talking about all our freaking life, this really should not be happening. It's okay kind of for this to happen, putting in a higher low here when our last higher low was here, but we really don't like to see how strong and violent this higher low ended up being put in. So this is kind of, bulls are maybe thinking, maybe trying to get out of here, expressing some urgency on these lows to try and push the price higher, but certainly no urgency up here to continue that buying follow through, as bulls are taking profit here, bulls are taking profit here, bulls are taking profit here, and certainly bears are getting much more confident in putting in shorts. So when you have this push down sign of strength that ends up being 1 push and then a second leg, double bottom here, and then kind of puts in the confirmation up here, the next opportunity for bears to take a short is on this bar. This is your L1 from the pullback. That ends up not really working out for you, but it doesn't take a new high. If you were to take this one, your stop is going to be probably above this bar here, if not all the way above this bar. Most realistically, you're probably going to take the stop above this bar. But if you're trading on a low time frame scalping type of situation, probably above this bar, right? So this technically isn't a low 2 because this is an inside bar of this one. But even if it was a low 2, even if it was lower than this, it wouldn't really be a low 2 since we haven't taken a new high. But this is a small inside bar that theoretically underneath bears could short it. But bulls were in a territory of, we've seen nice strength here, nice strength here. We're going to buy above any bar. So as soon as this bar closes or breaches this bar's high, we're pushing all the way to the top. But again, bears step in, bulls are not able to continue the buying upwards, and now we have 3 clear pushes upward. Bears step in on this inside bar, and this would be your signal underneath this bar to take a short underneath this inside bar with a stop, really tight stop here, or looser stop to be about here. If you happen to miss the trade beneath the inside bar, you can just take the trade beneath this bar on the follow through, strong follow through that's attempting to break out of the channel. You take the trade saying, if we push down further, we're going to probably confirm the breach of this channel to the downside, and then we might be looking for 2 legs down. So this is a much better trade to take on the short side, following these 3 pushes up, putting in a lower high from this lower high, which itself was a lower high, almost a double top pullback kind of situation, you could call that as well. And then you're again looking for a push to down here, perhaps even lower, probably even lower, right? And that ends up happening throughout this region here. So if you enter from the beginning to the end, it's 2.5%. That means that there should be a setup somewhere in this area too that would still produce some money for you. So let's look for that setup. Basically, we're going to look for every pullback that we can sell here. And I think people have a better ability to kind of look at charts in a bullish direction. So we're going to talk through it this way. We have 1 push, 2 pushes separated by a trend line, building their own though trend line here, right? Kind of, just a 2-tap trend line. But really you have 1 push up and then the second push up there. If we break back down, we have a pullback, we create a double bottom pullback here, coming back into this range of buying territory. Oops. This was a buying territory, right? So when we re-enter that region, having more consolidation and buying territory. When I'm saying buying, I mean selling, by the way. This is an inverse chart, but I'm not going to talk about it like we're selling upward. We're going to be buying upward, just understand. Now we have a long above this. So we have one push down. We kind of have a, a breach. This is your low one. This is your high one pullback. And here's your high two pullback. So you're looking for a get in there, put your stop underneath this trading range, and looking to capture part of this move, right, for a second leg. You're expecting there's going to be a second leg. It never fills until this final bar here. This is where you finally get your fill. And are you still in at this point? Following this bar, this is an inside bar of this bar. So you're still okay, but you don't like this setup. This ends up being an inside bar of this bar. Wow, this is an II, and this is yet another II? Wow, this in fact breaches the low of this bar. It's not an II, but because it ends up closing near kind of in the same way, and it's a red bar, this is the color of the bar that we're looking for, we can keep our entry in here, and we fill on this candle. If you don't fill on this candle, you can fill after this candle. And you can take this up. Here we have one push, two push, three push, wedge. But this wedge happens to be a very parallel channel, right? But that prompts us to take another pullback. Strong bounce here. This turns out to be the second attempt, the second push down. This just ends up being your entire pullback. And somewhere in this region, you can get your buy, but really I think your entry will be either here, or if you really want to wait for the pullback, it would probably be above this. At this point, you're probably, like here you're thinking you're wanting to get a second leg down. Let me just draw it. You're thinking you want to get a second leg down, and that's where you can pick up an entry in, but you end up not really getting a second leg down. This is the best you get. This bar is the best one that you... Oh, sorry about that. This is the best opportunity you get to get a pullback, and it doesn't come anywhere near this level. That tells you how bearish how bullish we are, rather. So this produces this, which is not a pullback. Then you get this kind of pullback again that breaks underneath this level, but then it gets outside barred up. When you get this outside bar up, now you're thinking, are we really actually going to get a pullback? What if we just keep pushing upward here? You're not really expecting that, but when you get this strong, very strong inside bar, now this is a beautiful bar right here. At this point, you have to realize, okay, we just have to take the shot, because what if we're going to miss out on this? And so you enter here, you put the stop on the other side, and then you get to capture the remainder of this move. So that's a good trade there. Now we have one clear leg, stop, second clear leg. We even have this part as well. So it's an Elliott wave 1, 2, 3, 4, 5. Strong reversal bar here. Weak retest here. And now green bars take control, right? Okay. So that's that. Now, were green bars able to make 1% here? Kind of. For that, your entry is going to be above this candle, and then trying to pick up any pullbacks that maybe you can catch down here. But you fill on this bar, stop is down here, and maybe trying to catch back to this level here, where you last had bulls trying to make an opportunity to make some money. They didn't make money here, but they showed a little bit of strength. They showed some sort of, this was the only place in the entire down move that bulls were able to show some strength. And it came after also this bar, which also showed a little bullish strength. So this bullish strength ends up being a little bit cumulative. The strength of this bar is what inspires buyers to pick up longs in this area. And even though it doesn't work out, they may still be in the market and they may be looking to exit break even. So we can target that region. That's about 1%. So you can get that there. If you don't get that there, you can try and pick up any little dip that you get, because once we break above this, you kind of have a little bit of a confirmation such that you feel decent about picking up maybe a long in this area, like on this wick. Maybe if you're looking for it, you can pick up a long on this wick with a really relatively low pain threshold and look for a move to the upside. So that's a way you can capture this. If you miss that, you certainly see now this one push down. Let me just draw it. You certainly see one push down, second push down, very weak. Oops. And then you also get this reversal pattern. So you get this dump, inside green bar, and then an outside green bar to the upside. Not quite an outside green bar, but it's definitely a long signal bar here. And then you could fill on above this bar, on this bar, and take that to the high. So those are your bullish moves within here. And then when we get up to here, we kind of have, we had this kind of coming up, and then we clearly had this pretty strong break that lasted several bars here, you know, almost like 10 bars, and there's only one green bar. And you can say this is a green bar, but it's the bar that happens to have the lowest price on the board. So all of this is quite bearish. And then we have kind of a retest of the high. Oops. And then again, bears try to step in here. This is, if bears are looking for another opportunity to get in here, this is kind of the bullish, maybe they're thinking this is 2 legs up, and then when they come down here and then they get the second opportunity, surely this being their L1, this is your L1 here, we should probably be looking to take the L2. And that's how you can capture this move. So that makes sense too. It's a little bit trickier to catch just because we end up having so much bullish activity here that you almost start to think, is this actually a bullish market? But we are still looking for a second leg. Once we see the strength of this leg, we are still looking for a second leg down. And if I'm not mistaken, we actually get a pretty good leg here. Oh wow, it's much stronger. I thought it was a 1-to-1, but we end up getting all the way down to almost a 1.618. So there is that. And the last one that we will look at is this right here. Obviously, I mean, we can talk about bullish trades as well, but this is really probably the only bullish trade that we get that we haven't spoken about. So basically, this is, you just buy this dip here if you can get it, and if you can't get it, I guess theoretically your buy would be above this bar here, and you're just running the momentum play, and you can get as much as you can out of here. Alternatively, after you get this push up, you can buy above this bar, above any bar, right? You're looking to buy above any bar, and so you get this pullback. You probably buy above this pullback. Oops. Oops. With a stop there, looking for a high. And if you miss that one, you buy above this bar. You can buy above this bar on this bar and look for some sort of push up. Maybe you can capture up to 1% there. There, you're probably looking to exit kind of once you see this strong bar. You're probably going to exit on this bar, or you might try and put your position to close up here, and it never ends up going, and you end up stopping out somewhere in this region. So you don't really quite profit if you enter this high, but you could. And then the last trade is we had exactly what we were talking about, kind of putting in this double top, following this really strong move. When we get this double top, we might be now looking for shorts. And we do have this double bottom that bulls get this buy off of. And that's exactly the reason why we can take this short, is because you have one push down, 2 legs down, very clear, right? So this should be the one that we just go up on, but we end up having a very like ugly chop to this high. And as soon as we start to build any sort of trend line, we break down, and then we get a retest, double top, very weak retest. And now, once you see this, bears should really know to get active, and this is our sell signal. And that would be the trade. Stop here, targeting much lower, maybe all the way down to here, into this last buying region. So we'll have to see how that one plays out. But yes, I believe those are the trades of the day. The only other trade that you could have taken was this one in here, which we kind of talked about very briefly. And other than that, I suppose you could have tried to take a long over here. In fact, we spoke about that earlier, but I didn't like that trade. We actually called it live, I think, yeah, that you could buy it here. But I didn't like that trade because we weren't expecting a high probability of breaching this high. And so you're really only looking at 0.5%, not a great trade. So that's why we didn't take it earlier, and that's why I don't mention it here either. So those are the day's trades.